Hello everybody. So this is going to be another weekly review video. This is for the week ending July 3rd, 2026. The assets I'm going to mention in this video are Bitcoin, gold, and the Euro USD spot Forex pair. So that was basically what I traded over the week. It was a 3-day trading week for me. I really wasn't incentivized to trade on Friday, July 3rd, because that is actually a U.S. banking holiday, and I was worried about like liquidity headed into the holiday, U.S. Independence Day, July 4th. So yeah, let's get going on this. So the first theme of this recap that I want to mention is the difference between trading analysis and trading execution. Trading analysis is austere. Trading analysis is oftentimes you have the benefit of hindsight. There's no emotions involved. There's no active trades involved. It's kind of like what we're doing right now on the weekends, or going and looking at trades from 2023, or it's very academic. It's very, you can be comfortable resting in theory. Whereas trading execution, you have to face the reality of the rest of your life. As far as the trading goes, you have to face the reality of, actual capital at risk, or at least the potential prop firm payouts at risk. You have to face the reality of, you really shouldn't have to trade every day, but the prop firms incentivize you to trade every day. So trading execution is a lot more messier. It's a lot more grittier. And this week was a great week to show that. It's fair to say that I was lucky this week, because I emerged from this week with 3 trading days, and all 3 trading days were in the green. It was a little bit messier than I would have preferred, but again, we're essentially entering into like accumulative markets with the very last days of June. Tuesday, June 30th, was the last day of both a month and a quarter, and then the early days of July. So Wednesday was July 1st. And not only that, but it was a non-farm payroll week. So with non-farm payrolls coming out on Thursday morning. So my philosophy was to scalp even more, so I would call trading like the entire 4-hour candle range on a 4-hour CRT a scalp. I would call even like going to like the 2-hour chart and looking for that kind of like, the better part of a 2-day swing trade. I would call that a scalp if you're just trying to be in and out on the same day. But the type of trading I was doing with every one of these trading days except for one was very, very low time frame, and I'll give you an example. So my first trade of the week is an example of this. So this is the chart for Bitcoin, and I had a modest win, just identifying kind of a draw on liquidity. I was more trading the late accumulation into manipulation with this one, and it was right after the futures market open. So the futures market's open at 6 p.m. on Sunday evening EST, and then during the Asian Open, I think around 8 p.m. I was in. I'm going to go to FX Replay and just be able to show you some of the lower time frame components of this trade. It did more or less follow my model. So in other words, I didn't quite have like the clean, counting this as candle number 1 and then only 8 candles. Obviously, it's like this much more accumulative range over the weekend. But my theory before I entered the trade was that price would have to get to into premium within this little range here. If it was going to dump lower, it was going to have to get into premium first, right at the weekly open. And so I'm here are the consecutive fair value gaps. So it's kind of like the bullish intent off those lows. Now, what I'm ignoring here is this LRLR. If this were any higher time frame than like this little scalp, then I wouldn't be able to ignore that. And actually, we see later on that I'm trading a kiss of death into a bearish turtle soup. So my kiss of death goes into a key level, into the bearish turtle soup that ends up taking out these lows before price can then move higher later in the week. So I was comfortable taking this trade just because basically, I actually, there's a whole idea of like order flow trading, but just realizing where we are in the time of the week. We are at weekly open, and that calls for manipulation. And I was pretty confident that I knew in which direction to manipulate. Oops. Okay, sorry, my mic just went up. Before rapidly diving down and taking all of that liquidity out. So yeah, so it's that little pullback there was promising, though I think I might have waited for another low to form. I did, yeah, because I mentioned that I was talking about how so that's the futures open, and then I'm thinking I'm waiting for like yep. So some more lows to form, because Asia shut early. Asia is really 8 p.m. So we're essentially waiting for that candle to get in. Yeah. So I think I'm actually in there, and I actually like my entry. I mean, this is still the 15-minute chart, so it's not like a super. It's not the craziest scalp, and I'm not even sure, as long as I told myself, as long as I can enter below this gray segment, then that's essentially doing my kind of a very scalpy version of a turtle soup entry. Range, accumulation, manipulation, distribution higher, and I was very conservative with my take profit. I'm pretty sure I essentially cut this trade pretty quickly. Just not wanting to expose myself to too much extra risk. I'm pretty sure. Let me go back to PowerPoint here. I'm pretty sure I was out at that high. Like I was just that comfortable with just saying, okay, it's just a little scalp to start the week. This is like this philosophy of like taking a base hit in trading. Actually, no, I guess I might have held a little higher, kind of an overnight trade. Just gonna fast forward it one more time. There we go. Yep. So that's kind of nice. So that inefficiency there, like those, like a headless 15-minute candle, a headless 15-minute candle on this contract there. I'm not sure how it looked on Tether, but yeah, that's essentially during the NY Open, that's essentially like a bearish entry that's possible there. So that was my trade for like Sunday night into Monday. So that's one trading day out of the way. Then my next trade was really kind of pathetic. It wasn't really the best trade. I kind of like took it in. I took an inducement short on gold. Let me go back. I think I'm still on. Yeah, I'm still on that PowerPoint, aren't I? There we go. So yeah, let's just look at, yeah. So if you look at this, you might think, oh, well, I see what he did. Like there's a turtle soup here of this old high, and you kind of get a little continuation scalp lower during the PM session of the last day of the month. Okay, cool. What my short was actually it was this large up close candle, and then I actually went short here, and I managed to get out there, even though it's not even 50% of the candle. So I was a lot more cowardly, I guess is the word, with the way that I've held with the way that I held the position. It was almost like I opened the trade thinking that, oh, that's kind of a scalpy version of the turtle soup model that I'm trying to study and master. And so it's almost like I knew I was being induced, and I got out of that trade. So I'll show you where my entry and exits were. So not a whole lot of drawdown. Like I'm pretty happy, but you can see, like, if this was a draw on liquidity, which it ended up being that gold was actually more bullish, then we're not even coming close to that. Even just we take out that swing low, and that's actually your bullish turtle soup entry, kind of in Asia. When we do our look ahead, I'm going to show my new way of like looking at gold that I've like kind of come to. I mean, I might not trade gold as much. I don't know. It's kind of odd. I want to show you a little tidbit that I've found about gold. So I'm not even going to load that up into FX Replay. Okay, so this is another trade. I'm not actually. I guess I could show you on FX Replay what I was thinking. So let's fast forward to Wednesday now, and let's actually get Wednesday's price right to here, and I want to show you what I was thinking with this euro long. This euro long was like the money making trade for the week for me. I had a ton of conviction. I held it, and I basically caught this rip, which I would call an authentic turtle soup. So this is actually like, if your goal when you're first starting out is like, I want to catch one authentic turtle soup a week, and then all my other trades could be scalps and just like not screw it up, basically like, make little base hits here or there. That's enough to pass lots of evaluations, get lots of initial payouts, get into the point where you're, oops, I'm sorry. I just messed up here. My bad. I'm going to go back to this for you guys. All right. So let's go to let's go to FX Replay real quick. And I'm going to switch over to the euro, and we're going to go to, it's basically like Wednesday, July 1st at 5 a.m. Let's call it. Don't worry. I'm going to back out of this thing real quick once and just give you like a lot of context in the lead up to this trade, because this is the real turtle soup for the week, for me at least. I'm sure there were so many others that I missed. But I mean, it's talk about confluences. I mean, you have to be okay. So on PowerPoint, I screenshotted this at 11389, and that's where I kind of felt confident that there was a turtle soup appearing. Oops, I did it again. Let me just fast forward over there real quick. Okay, good. Okay. So right there. So this is where I felt like I was confident that a turtle soup was appearing. So let's zoom out. There's like a crazy SMT happening between the pound and the euro. There was, I think it was like central bankers meeting and speaking all at once. So you had like back to back to back to back. I just come down here, hang out with me. Come down here right now. Come down. Okay. So it's basically like you can see you can see the promise of the setup, right? So you've got this old high here, and then you've got a break above, close above, and then you start counting. Let me see. Can I do like a 12-hour chart? Let's see. Yeah. So 1, 2, 3, 4, 5, 6, 7, 8. So it's literally like this candle, this 12-hour candle, you're going to look for a violent, liquidity sweep to take out the range, but then to extend higher, targeting these highs. So in other words, this is my draw on liquidity for my total soup entry. These are the old lows. There's no like consecutive fair value gaps on the 12-hour chart, but there are on the 4-hour. Actually, there's like a very large fair value gap that way, but let me check the 2-hour. So obviously on the 2-hour there are 3, like right, 1, 2, 3 fair value gaps. So this is what we're looking at. And again, like you might think like, why aren't we bullish on the dollar? Like, isn't this like LR? And I hear you, but keep in mind when in the when on the calendar where are we? We are in the opening. We're defining the opening range of a monthly candle and a quarterly candle. So in other words, we're basically like trading at 5 p.m. right now on a daily candle, like, and it's just, it's a small range into a slightly bigger range into a ton more manipulation that might occur. We might have to wait till July 20th to see like the true trends start to show their hands on the quarterly basis, right? So we can't get too worked up on July 1st with directionality, and we should more be looking for, when we're manifesting our accumulation, how does the lower time frame liquidity how do the lower time frame liquidity dynamics play into that? So let's wait till that level gets taken out, and then we'll look at the lower time frame turtle soup. Okay. So it just barely got taken out right there. This is like a 2-hour order block. Let's see. Is there a nice 4-hour? This is also a nice 4-hour order block. I'm going to go back to, yeah, so it does get lower than that. And that's like the crazy part about this trade is that it's this idea of like the euro drilling down past the comfort level of the euro bulls before it's able to extend higher again. And so like it's really like this wick right here, right? And what is that wick? Well, that's a potential Romeo order block on the lower time frames, right? Oops, not 3-hour, 2-hour. So like this, the body, the swing low there, that's it. That's our target to go long. So like I am just like, I know this is going to be a big trade. Like there's something about the relative equal highs up here, and I'm thinking I'm like watching like I'm just like looking at these relative equal highs, and I just know that the euro wants to accumulate, especially this being non-farm payroll week. So I'm like really eager to get long, and I think I start like I put like half the contract position there because I'm like, ooh, look, we cleared that low, right? And so I do get a little bit of drawdown on this, but like this is one of these setups where you're like, I'm like comfortable holding through the drawdown. I think this was my stop loss was like right around there. Yeah. Because I mean, it like that this round number is a good invalidation level, right? So you could have a stop loss like there would make sense too, because like if we're round tripping and we're like strongly closing below, then like, then the bottom's falling out essentially. Like we're obviously going to leave these for later. But no, so let me go back to like a 15-minute entry here. Or yeah, I could even go to a 5, but that's okay. So that's the low. That's literally the low there. And I remember thinking to myself, one of the things you worry about is that when you have such a short little wick and then you have no wick, you're like, that's inefficient on a lower time frame, right? Like you don't like to see that that type of I'd hope I hope that the wick would be a little longer on that particular candle, but we're forming a doji all the same. And so, sorry, I keep jumping around time frames like I've got attention deficit, but anyways, 5-minute fair value gap. It's not a super kind. I remember thinking to myself too that after this low, and I'm already in, so I'm like, okay, one more turtle soup, basically, of that on the lower time frame. But like I'm already thinking, well, good thing I'm already in, because man, like we just shot higher, and it fits the narrative of like, me looking for ratios, and so basically thinking like, how many candles of setup versus how many candles of delivery are needed, and this one was like super speed delivery. Like we got the delivery done really quickly. Actually, that was actually, oh yeah, right there. So we actually did trade back down into that original range low that I was looking for. So that would have been a chance to get in a little later. I wouldn't really call it a breaker entry, because it's like, don't you expect breakers to form after the low? But we're like kind of like tapping into an old order block, like it's like a reclaimed order block entry. Oh, there's a breaker entry. It kind of misses it though. Oh, I guess that was so I didn't really, yeah, huh. Anyways, I guess that matches more that liquidity there that I was seeing. But we actually get continuation on this. So, the next trading day. So into that afternoon. But that's my full like, oh, you know what it was I treating this as a 4-hour? I think I was treating this as a 4-hour. I was. So like I was really looking for there, and then like letting it run, and then it coming back down. So, yep. No, but I'm pretty happy about that trade. That was like the best trade of the week for me. And if you keep playing it out, it's a turtle soup. I actually didn't trade on Thursday non-farm payroll day. But let's just keep playing it out, because it'll help set up the next part of this talk, which is a look ahead. So again, we're on the 4-hour time frame. And so that was like that successful like range turtle soup. Yeah, so there we go. So there's our 8:30 a.m. non-farm payroll news trade just popping up. I have this labeled on the PowerPoint actually. And then here's holiday trading now. So like Friday, June 3rd is the holiday trade. I'm actually hoping on Monday's open to take out this swing low, this 4-hour swing low in the holiday trade, because that's essentially after the market closed. So okay, so back to PowerPoint. Okay, all right. Yeah, so now that I'm looking at it, I really was looking for the highs of the 4-hour candle, so like a 4-hour CRT, and then just anything else after that was like gravy. So let's go back and pretend to be the aristocratic vampires and just do the austere hindsight analysis. So Romeo's got a saying, and it's, when you're journaling, if you missed a trade, journal it and catch it next time. right? So this is like journaling it and catching it next time. So this idea of that midweek, uh, it was both gold and Bitcoin. So it's basically like both the liquidity products. Bitcoin had that rising trend line liquidity like majorly from the previous week, and then they both stabbed into it and went higher and then took it out. And so this is just like a beautiful turtle soup. And then if you were trading gold on the holiday, gold is now up much higher from there. So here's Bitcoin. Here's the entry for the taking out the liquidity on the low there. And then this was the reason why I have this as an under journal and catch next time, because this is like I was actually like, it's not that I don't trust myself to trade the news, but I actually had I was like really busy at work that exact morning. I had like a really busy week at work this week because of the June 30 close of the fiscal year. So I had to serve that master essentially rather than shoot the moon and trade. So this is the look ahead. Basically that the amount of bullishness that I saw in Bitcoin and gold, and some of the news about like, I think there was like a basically Trump Bitcoin news. And I won't even go into what the news is because it doesn't matter what the news is, but essentially it's like this reaction in price. And so I'm seeing like these long wicks, and I'm seeing an inability to close decisively below the wick on like, we'll call it like the monthly close, right? So like June 30, I mean, we're on the weekly chart here, but like, we obviously need some accumulation and some attempt at stabbing into this internal liquidity before I'm gonna call it like July 20th, before we have our quarterly, our resumption in the bear trend. And I just want to tell you this: gold makes a lot more sense when you look at it in terms of the renminbi, which is the Chinese offshore yuan, because China is the marginal buyer of gold, and they're essentially the price makers of gold. And the Shanghai Commodities Exchange, I'm not even sure if I'm getting that name right. I don't really follow it that closely, but I know enough, and I'm hoping that you can see this too, based on like this turtle soup that we're both looking at. So if you look on the chart on the left, you're thinking, well, oh, is that an inducement low? Because we hit the key 4,000 level, and then we've responded really well, but we never really cleared the swing low formed in Q4 of 2025. But we did in the renminbi, because what the renminbi did was while the dollar was losing out to, while gold was depreciating against the dollar, like while it was losing value with respect to the dollar, the renminbi at the same time was gaining value with respect to the dollar. So the renminbi has essentially like a tailwind with respect to gold being priced in dollars. So that's why you get essentially this kind of like long-term SMT, but it's not really an SMT, because all the fact that we cleared this swing low, this Q4 weekly swing low in gold renminbi, all it demonstrates is that, yeah, the renminbi was stronger than the dollar. There's no you shouldn't really get too excited about it, but at the same time, you should recognize that if you're charting gold and looking for long-term signals, I have no relationship to China. I'm an American. I live in New England, right? But I know enough about global finance, and I know, if you have it's just supply and demand. It's just supply and demand at the end of the day. in terms of setting the price equilibrium, and that's happening in renminbi, not dollars, right now for this particular commodity. So China is they're going to basically let gold appreciate. The Iran war has put some pressure on China. So if you look, it's March 2nd of this year. If you want to know what week that is, that's this lower high, right? That's the start of the Iran war. And basically China has been withdrawing liquidity, and you can listen to like a Michael Howell, who he's a kind of a liquidity commentator, analyst, and he gets into the more of the plumbing with this. But if you're looking from a pure chart perspective, the news at the top was the Iran war, and of course, like, war should be bullish for gold, right? But no, not if it causes one of the major axial centers of finance globally, especially with regard to commodities, buying and selling commodities. Not if it requires them to withdraw liquidity from the global financial system. And they had to do this once before, which was in 2008. They had to do this. So the headline reason is in the lead up to the Beijing Olympics, but we all know what else was happening in 2008. So it's just part of the global liquidity cycle. Now, the global liquidity cycle, nothing goes in a straight line, and you're going to see ebbs and flows. So this is the gold priced in renminbi, and I see a monthly CRT trade. I actually see a monthly CRT trade. Obviously, we've got like the beginnings of ascending trend line, like liquidity building up, but we might, in terms of like it might be another like lower time frame SMT type situation, like maybe with silver, you know what I'm saying? And you don't have to like be dialing up the chart, the renminbi chart, but I like 30,000 as a near term target in this, and I'm going to be trading the gold futures, so I'll be trading MGC, and yeah, so I'm not going to be, but I'm going to be charting and paying attention to this on an intraday basis with this chart. I'm going to be looking at the renminbi because I just think it's more accurate. Like you're essentially diluting your analysis to involve dollars at this point, because the dollars aren't the main mechanism through which gold is being priced. So that's it for the weekly recap and the look ahead. As far as the news events next week, we're here. Let me just check to see what Brave. I will pull up the calendar for you all real quick. We're just gonna look at the high impact news only. Yeah, so it's a much quieter week next week from a news perspective, and so I'll just dial you folks into that. It's kind of funny if you do like brave.exe. I'm still learning how to use Streamlabs, so please bear with me. But yeah, so it looks like services PMI, the Reserve Bank of New Zealand, FOMC meeting minutes, right, at 2 p.m. And that's it. I mean, there's a Canadian, Canadian employment data. So it's a great week for further accumulation, and it's like a great week to continue to build liquidity to create the box, right? We're box making, whereas like I want to see like a wick. That chart is actually not a great time frame to look at this, but actually I can pull up TradingView. And we can just do some candle counting really quick. And yes, I've got the free version of TradingView because I'm a brokey. So just doing some candle counting, and I did say that I was gonna do this in the renminbi. Okay, so like, if it's this candle that like kind of stabs down and like takes out this liquidity and like, okay, we're range forming, right? 1, 2, 3, 4, 5, 6, 7, 8. So like July 20th or July 27th, that's when you're looking for like this high to be made. The other thing is like ratios with this, like both ratios in time and ratios in price. So let's play with that. Ratios in price. This big breaker, this order block, whatever you want to call it, 618 fib is, we're stabbing into the 618 fib of this very linear envelope here, and we're we're hitting just above, we're wicking above the 618 fib in the consequent encroachment of this body, right? So that's and also we're stabbing into the actual body of this doji, right? And we haven't done that. We haven't like we traded down, we closed, we like wicked, but it was like, okay, there wasn't really like a move lower and then a stab higher into that. And so it's like that's undistributed as far as I'm concerned. That's like still inefficient to have that there, as far as I'm concerned. So we can use that as like essentially like a base case here. And timing ratios wise, if we did just turtle soup, a bullish turtle soup in gold, 11 bars and 3 to 5, right? So 3 is July 20th, 4 is the 27th, and 5 is August 3rd. So like two different ways of looking at the timing of turtle soups, like two different ways, the same with the same they're like converging, right? Like multiple different levels of analysis converging on the same price and the same time. So I'm going to draw a smaller little rectangle there to kind of like remind myself. We'll go to the 4 hour. And so, and I'm going to do, anyways, I'll draw it and then I'll decide what color to put it on. But I'll be checking back in on this as we go. I'll be, and I think I will trade gold. I will be bullish on gold. But yeah, we'll call it Monday to Monday. A 2-week window, and just divide by 7 to get back to dollars. But you don't, like, not a lot of people have this on their watch list, but like here, potential debasement could cause a weakening in the renminbi further. So in other words, gold could range with respect to dollars, but as the renminbi's debasing, or as the renminbi's getting devalued with respect to the dollar, that could change the price of gold in renminbi, right? So like a couple different like push-pull things happening. I'm a scalper, so I'm okay with like a little bit more of like a bullish ranginess to gold, and just like making lots of like lower wicks for myself to get nice scalp entries in, lots of CRTs. But yeah, so like that purple little box there, I'm thinking that's going to be like the price and time target for this turtle soup. So yeah, you might be asking yourself, like, why don't you have that as your target? I'm just we're in the wrong liquidity paradigm. Like we need to plumb these lows in terms of liquidity. Like we need to really stab a lot lower. Take out that inefficient low there. In terms of liquidity, but it's into early 2027. Like there's some ranging that's going to have to happen as we work our way down to that first half of 27 crisis, and then liquidity will pump back in. Alrighty, guys, thank you so much for listening. Hopefully it was as good for you as it was for me.